Ever wonder why so many people jump into the money markets dreaming of big wins, but end up walking away with empty pockets? It's a tough pill to swallow. But statistics often show that a huge majority, maybe even up to 90%, don't succeed. So, what's the secret? Is it a super complex strategy? Insider information? Nope. More often than not, the real reason lies right between your ears. It's all about mindset. Let's get real. Most people enter the market with a lottery ticket mentality. They're looking for that one lucky trade that will make them rich overnight. They hear stories about someone who turned a few $100s into a fortune and think, hey, that could be me. This is mistake number one. The market isn't a casino. It's a strategic game of probability, discipline, and patience. Successful traders don't gamble. They calculate. They have a plan for every single trade and entry point, an exit point for profit, and most importantly, a stop loss to cut their losses if things go south. The 90%, they often just buy and hope. Next up is the emotional roller coaster. Fear and greed are the two puppet masters that control the unsuccessful trader. When a trade starts going their way, greed kicks in. They think just a little more and hold on for too long, only to watch their profits evaporate. On the flip side, when a trade goes against them, fear takes over. They panic sell at the worst possible moment, locking in a loss right before the market turns around. Sound familiar? Successful traders learn to master their emotions. They stick to their predefined plan, no matter how tempting it is to deviate. They understand that losses are part of the game and and let a single bad trade wreck their entire strategy or their mental state. Another huge factor is the refusal to learn. The market is constantly evolving. What worked yesterday might not work tomorrow. The 90% often find one strategy, maybe from a YouTube guru, and try to apply it blindly without truly understanding why it works. When it inevitably fails, they blame the market or the guru and jump to the next holy grail system. This is a cycle of failure. The top 10% are eternal students. They are constantly reading, backtesting, and analyzing their own trades, both wins and losses, and adapting their approach. They don't just copy, they comprehend. They build a deep understanding of market dynamics, risk management, and their own trading psychology. And let's talk about patience. We live in an instant gratification world, and we bring that attitude to the markets. New traders expect to see massive returns in their first week. When that doesn't happen, they get discouraged, take bigger and riskier trades to make it back, and end up blowing up their account. Building wealth in the market is a marathon, not a sprint. It's about compounding small, consistent wins over time. The pros understand this. They're okay with having a slow day or even a losing week, because they're focused on their performance over the long haul, months and years. So, how do you escape the 90% club? Start by shifting your mindset. Stop chasing get-rich-quick schemes and start treating trading like a serious business. Develop a solid trading plan with clear rules for entry, exit, and risk management. Keep an emotionless trading journal to track your performance and learn from your mistakes. And most importantly, commit to continuous learning and be patient with your progress. It's not about being the smartest person in the room. It's about being the most disciplined. Change your mind, and you can change your results. Thanks for watching. If this resonated with you, hit that like button and subscribe for more content to help you on your trading journey. See you in the next video.